Welcome to The Explainer. Let's just jump right into it. Today, we're looking at one of the most fascinating and honestly massive shifts happening in the tech landscape right now. We are unpacking the staggering $100 billion investment thesis behind AI memory chips. You know, everyone's out there arguing about which AI model is smarter or whether tech valuations even make sense anymore, but there's this quiet revolution happening right next to the processor, and it's essentially acting as a trillion-dollar toll booth for the entire artificial intelligence industry. Now, if you just read the headlines, you'd probably think the only thing that matters in the AI hardware race is the GPU, right? The graphics processing unit. But that's a total myth. The reality is, having the absolute fastest AI chip in the world means literally nothing if it's starved of data. So what's really holding AI back isn't just raw computing power. It's the physical ability to feed that computing power fast enough.
And hey, take it straight from the source. Jensen Huang, the CEO of Nvidia, the company making the most sought-after GPUs on the planet, he said it himself. Context is the new bottleneck. The AI labs, the cloud service providers, they're really suffering. I mean, even Nvidia is building its next product categories around solving a memory problem, not just a compute problem. This brings us to a massive technical constraint facing literally every AI data center today. It's this mysterious thing called the memory wall.
Section 1. The AI memory wall. Okay, let's dive into this and look at the true hardware bottleneck. Moving enormous amounts of data at extreme speeds, millions of times per second, that is our era's true bottleneck. Think of it like this. Imagine the world's absolute fastest chef. That's your GPU. This chef can cook 10,000 dishes a minute. Insane, right? But there's a catch. There is only one helper allowed to fetch ingredients from the pantry at a time. That single helper, running back and forth with one little bag, that's your traditional DRAM memory. No matter how incredibly fast your chef is, the whole kitchen slows down to the pace of that single helper. Well, high bandwidth memory, or HBM, completely changes the game. It's like suddenly giving that chef 50 helpers, all working simultaneously through a much wider door. Finally, the ingredient delivery actually matches the cooking capacity.
Section 2, high bandwidth memory solves it, and it provides the massive bandwidth required for modern AI, like the 350 gigabytes per second needed just to train GPT-3.
Section 3. A trillion-dollar valuation. Let's look at the financial impact. Because once you grasp that physical hardware problem, you can really understand the phenomenal financial impact this has had on the companies that actually manufacture this memory. Companies like Micron Technology. Just look at Micron's staggering Q2 2026 revenue. They reported $23.86 billion. That represents a massive 196% year-over-year jump. We're not talking about incremental growth here. This is a near 3x explosion in annual revenue driven entirely by the world's desperate demand for AI memory. But wait, it's not just top-line revenue, it's the profitability. 74.9%. That is Micron's non-GAAP gross margin for that quarter. For a company that was historically seen as, a volatile commodity chip maker subject to brutal boom and bust cycles, a 75% margin is almost unthinkable. They are essentially printing money.
And the financial markets absolutely took notice. On May 26, 2026, Micron officially entered the trillion-dollar club, crossing a $1.01 trillion market cap. This historic rally was fueled by a dramatic price target upgrade from UBS analysts, who bumped the target up to $1,625 per share. Wall Street is now valuing this memory maker the exact same way they value leading logic developers like Nvidia.
And this brilliantly illustrates what we call the oligopoly premium. Back in the 1990s, there were over 20 meaningful DRM suppliers out there. By the 2010s, those brutal boom and bust cycles had wiped out the weaker players, leaving fewer than 10. And by 2026, well, we're looking at a licensed oligopoly. Samsung, SK Hynix, and Micron now control over 95% of global DRM production. They've essentially become the exclusive toll booths of the AI highway. If you want to build AI today, you have no choice. You have to pay one of these three companies.
Section 4. The new infrastructure economics. The structural capital shift.
So, you might be wondering, is this just another dot-com boom and bust? Well, the data says no. Hyperscalers, think Google, Microsoft, Amazon, they suggest otherwise. They have this almost inelastic demand for memory, so they're actually erasing market volatility by locking in these 5-year strategic customer agreements. We're talking legally binding capacity commitments, downside price protection for the manufacturers, and 10 to 30% upfront cash prepayments. These hyperscalers are literally funding the factories just to guarantee their place in line. Memory is now being treated as absolutely critical, contracted infrastructure.
Section 5. Scaling up the tech. Let's look at the evolution of the hardware.
To keep up with AI, the hardware itself is undergoing this aggressive evolution. HBM4 doubles the bus width to 2048-bit and pushes peak bandwidth to a staggering 3.3 terabytes per second. But the really strategic shift here is in the base die. Micron made a massive pivot to outsource their HBM4 base die production to TSMC's advanced 3-nanometer logic process. And by doing this, they secured product performance and locked in their spot on Nvidia's next-generation Vera Rubin platform. Real game changer.
But hey, the innovation isn't just happening in HBM. On the storage side, Micron launched their 9th generation or G9 NAND featuring a 276-layer architecture. This extreme density allows for products like the world's first enterprise PCIe Gen 6 SSD, hitting incredible sequential read speeds of 28 gigabits per second. So the entire memory and storage stack is scaling simultaneously. To actually build all of this advanced tech, the physical scale of manufacturing required is just mind-blowing. Micron is executing a 2-decade roadmap to onshore production back to the US. We're talking $50 billion for 2 megafabs in Boise, Idaho, and a staggering $100 billion for 4 megafabs in Clay, New York. Plus, all of this is supported by $6.44 billion in direct CHIPS Act funding. To put that in perspective, this is the largest cleanroom commitment announced in United States history.
Section 6. The AI supply squeeze. Now for the unintended consequences.
Okay, so all this massive investment in AI memory, it actually has some unintended consequences for the rest of the world, all due to a physical constraint called yield drag. See, because HBM requires stacking dies vertically, sometimes 12 or 16 layers high, it is incredibly complex to manufacture. If even one layer fails, the whole stack is completely ruined. Because of this complexity in the physical size, producing just one HBM bit displaces 3 times the normal wafer capacity of standard DRAM. These memory makers are frantically shifting their factory floors to build HBM for AI, which means, yep, they are starving the supply of standard memory.
And that connects directly back to you, the consumer. Because standard memory supply is artificially constrained, contract prices for regular DRAM surged over 90% going into 2026. This means the cost to build normal, everyday electronics is skyrocketing. Everyday consumers are facing a 17% jump in retail prices for PCs, leading to double-digit shipment declines for both PCs and smartphones. So yeah, the world's hunger for AI memory is actually making your next laptop significantly more expensive.
Now, to remain totally impartial here, we have to look at the structural risks that could derail this $100 billion supercycle. Risk 1. Double ordering. If the AI hype takes a breather, customers might end up sitting on an inventory glut, which would crash prices. Risk 2. Architectural alternatives. If tech like SRAM or GDDR suddenly proves better for AI inference, well, HBM's premium just vanishes. Risk 3. The China wildcard. If companies like Huawei crack domestic HBM equivalent tech, the oligopoly's strict supply discipline fragments. And risk 4. ROI. If hyperscalers don't see the returns they expect and start slowing down their capital expenditures, this entire memory train is going to slow down right along with it.
Which leaves us with one final provocative question. We've seen how 3 companies have become the trillion-dollar toll booths on the AI highway, locking in literally decades of infrastructure contracts. But as the physical constraints of the memory wall drive costs to absolute record highs and push up the price of everything from massive data centers to the smartphone sitting in your pocket right now, who actually ends up paying the ultimate toll? Keep an eye on those quarterly hyperscaler spending reports. They're going to tell us exactly where this supercycle goes next. Thanks so much for joining me for this explainer, and I'll catch you on the next one.